Good morning, everybody. How you doing, Harv? And I understand they're having a problem with your video, huh, buddy?
What's up, guys? How are you today? Nope, Becky, we got Jessica and Kevin.
Hey, what's up, buddy? How are you? Can't see you, but I can hear you. Yeah, we've got a great little spot in downtown. We got a nice little river behind us, a lot of pretty colors. Not too shabby.
Yeah, even though we officially don't have a president yet, I'm sure that'll happen later today, tomorrow, or next week. The mortgage interest rates have reacted favorably to the election. There was a lot of speculation. What's the market going to do? Well, as you can see, the stock market reacted favorably. The bond market, which controls mortgage interest rates, reacted favorably. The purchase market, Kevin and Jessica, has been extremely on fire right now. And as a matter of fact, right now I have a closing going on that the title companies and all our vendor partners right now. Thank you, Chanel, for doing the closing for us this morning. But I will tell you, all our vendor partners are extremely busy. Jessica, how are you seeing it out there?
Yeah, our office and our location, I was taking a drink of coffee literally as you were finishing that sentence, which normally people would see if we had the podcast on, but that's why Jessica was snickering. So, yeah, we have a variety of properties around us. It's one of the things I like the most about our community. The city of Rochester, you have a downtown area, you have great restaurants, bars, community life, shopping. We're not that far of a drive from the city if you want to go all the way down to Detroit, but we are within miles of properties where you can buy large acreage. I mean, if you want real elbow room, lots of trees, you want deer running through your backyard. I mean, behind me, I had probably a 12 to 14 point buck walk through my yard yesterday. So it's just one of the beautiful things about our area that a lot of people don't really realize until they're out here on a consistent basis. It's a great place to live. That's why we sell out here. It's why we live out here. Our company really, really loves it in this area.
Well, I mean, they really got to know about the ins and outs of what the house is going to cost you, once you move in. I've come across so many more people that are buying houses that have been with the seller for many, many years. So once you do that, you got to know that the taxes are going to jump up once you buy it a year and a half down the road. And that's real important to me because, we always say we're here to make sure you succeed in being a homeowner, not fail. And I had a client the other day who was buying in Ferndale. Ferndale was taxing the property at $65,000 and she's buying it for $220,000. And, so we know that the taxes are going to jump up at least double. And so we went through with that with her and we put a plan in place saying, hey, look, here's what the taxes are. Yeah, it's a nice $1,100 payment right now. But in the next year and a half, it's going to jump to $1,500. And here's what I suggest doing: setting some money aside every month, like you're paying that $1,500, put it into a savings account. So when that mortgage company comes to you, and says, hey, your escrow is short, you owe a large lump sum of money and your payment's going up, you've got that large lump sum of money set aside in a savings account that you've been allocating for this reason down the road, and you can send it to them right away. And then you can stop putting money in the savings account and just apply it to the mortgage. And you've been doing this ever since. And we set you up to succeed, not fail. And it's advice like that, looking down, it's like Bobby Fischer, couple moves down the road, right? Chess, you got to make sure that you're just always looking down the road to make sure that they're going to be a successful homeowner and you're giving them the right info. I give info like the info I would want to receive myself.
I like that a lot. That's what I'm most proud about our firm. I said, we're there for everybody. We want to make sure they're successful down the road. We've saved tens of thousands of clients over the years, millions and millions of dollars, because that's the kind of advice that we give. We treat people like we would want people to treat our family, and we treat them like family, and we want people to succeed. We're not just going to put you in some crazy mortgage program to get you in. I guarantee you, majority of other mortgage bankers out there, yes, I'm calling people out right now, would only care about the transaction today, where John Kolb and his team and our entire team go ahead and we will let you know that that payment's going to go up. So there's no surprise party in 7 months when that assessment comes out and all of a sudden we get a phone call saying, you never told me that the payment was going to go up. We hear that all the time, Harvey Freed. Cannot stand that.
All right, I got my stuff back on.
I think so. Somebody's got their speaker volume on their computer up, because when Harry talks and Kevin talks, you can hear it twice. I can hear it through the computer and I can also hear it on the radio.
Hi, Harry Glantz and Dan Burke from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
is the norm right now, although we're doing purchases well within 30 and refis within 45. I would tell you this, though, but protect it. Don't leave yourself exposed. Go ahead, lock in your rate, get it going now, because you know what? You might not have this opportunity at any time in the future. As you said, Harvey, the election, the most people that ever voted in a presidential election right now, that's what happened. So, and that's why it's taking so long to count the votes. This is not a political statement. It's just reality. And it just takes time. Middle of the pandemic, election, you see what's going on in the economy. We got to turn this thing around. But right now, the home purchase market is great. We've got two great professionals on our show today. They're the best in the business, letting us know what's going on.
Yeah, we have, I believe, 3 properties that are going on the market in the next 2 weeks because they strategically waited until the election was done. We also had, it's a statistical fact that October before it's 44%, there's a 44% decrease in market activity in the month before an election year. That is a national statistic that has laid forever. But the statistic that follows that is the November following is traditionally extremely normal. So statistically speaking, and we saw it this year, we got a lot of slowdown that's seen dramatically more in the high price ranges. The higher the price point, the more that is seen, the more that's affected. As you go up, you know, in our market, once you go above 600,000 and higher, and especially in new construction, high price new construction, it's considerably slower and has been for the last 30 days. We expected it. We thought it. We actually warned our builders. We warned our buyers. We warned our sellers that was going to happen, and it did happen. So now we get to see if the trend that normally happens does, which is that November and December should theoretically pick up. Now, the question that we have is obviously we don't still know what's going on with the election. So there's still the uncertainty, and it's the uncertainty that makes people not want to make a reaction. It's not that they necessarily are worried about who's going to be in place. They just want to know what they're dealing with. They want to know who the president is before they make any big decision like buying or building a home.
Right.
True.
Yeah, exactly. It's got nothing to do with which side of the table you're on. That's really not the conversation. It's about that people just want to know who the president's going to be. They want to know what the politics of it look like. People really don't like living in uncertainty. I think that's human nature. People don't like a confusion of the situation. They just want to know what's ahead of them. The timeline can be long. It can be distant. All those things are fine as long as they know what's going to happen. Uncertainty is a very scary feeling for most people. And so the uncertainty of something like an election causes people to sit on their hands and just wait. They don't want to move until that's done.
Yeah, that's becoming more and more normal. Minimum 30 days of occupancy. A lot of folks are trying to mitigate that double move. In the last few years, that has been very popular. Homeowners want to take their equity out of the current home that they have and go into their purchase home. With the levels of low inventory that we're looking at, this is more or less just if a homeowner is living in the house, expect that we have got to add in occupancy. So I am having the conversations with my clients. Hey, this is financially what that occupancy looks to you. And folks like you guys, folks like John, again, going back to preparing them. That is why we refer our clients to you guys. That's why we refer our clients to John, because he does prepare them financially for what this looks like. So realistically, what does that occupancy mean to me? It's not just, okay, I'm not going to get keys for 30, 60 days afterwards. Financially, what does that look like? And we prepare our clients for what that looks like. It's almost every property that has homeowners in it. They're doing the same thing. They've got to find that next house to live in. Right. Well, I wanted to make a jab at Kevin and then thought, no, I won't. And here I'm going to do it anyway. So what in the world normal looks like these days? It's just very, very interesting. Everyone is worried, not only with elections, with the possibility of what it looks like for an additional shutdown. Folks are trying to limit the amount of houses that they're going into. They're trying to limit these double moves. Yeah, the occupancy is a very normal thing. Folks don't want to make that double move. They're trying to keep as much cash in their pocket as possible, but also want to feel comfortable with what is about to be their new home for their family.
Good, Mark. Well, I mean, yeah, I absolutely could do that. What I would do if were my situation is look at like where the break even is for everything, right? Odds are you didn't break even for the refinance that you just did 8 months ago, unless you just dropped your rate dramatically. But if you went from a 30-year to a 15-year, odds are you already made it up with the amount of equity that you built into the home. So now moving forward, we take a look at what the cost to do the new refinance would be, what the savings on a monthly basis would be, and kind of do the math on it, as Harry so eloquently chatted to me. Do the math on it so that you can make sure that it's going to be worth your while. How long are you going to be staying in the home for versus when does it pay out? And if it's close and you don't know if you're going to be there, why take the risk? Why refinance because once you throw that dollar out the window, it's gone. So if you don't live there that long, then you're not going to see the ramifications of it. But if you know you're going to be there long enough where it's going to break even, then absolutely do it. I'm actually doing the same thing myself for my own home because I was in a very good situation, but these rates are getting better and better. And you know what? It's time to look at it for myself as well. Yeah.
Harry Glantz and Danberg from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Well, Harvey, let's back it up a little bit for a second. I mean, look, there's a difference. The difference is that if you go to a big box retailer, are you going to get the same kind of service you're going to get if you go to a small family-owned company? We're a boutique firm. We pride ourselves in being in business a very long time. Our people are experienced. We're in the business to educate people, make sure they come out successful. And there is a difference in that. And it's just like when you deal with realtors like Jessica and Kevin, I mean, they're going to take the time with you. It's not about rushing through the process and just pushing it from one person to another. It's about taking the time, taking the care, making sure that everybody's protected and safe and successful. That's how we view it.
You know, you don't want to know what I think.
John thinks it's a conspiracy, but I believe in science, and I'm not a doctor. I'm not a doctor, and I don't play it on the radio, but it's real.
I'm not saying the virus isn't real. I'm just saying there's an agenda with the news outlets, and you know what? They're putting fear out there for everybody, but that's okay. The virus is real. Be safe, be healthy, everybody. Let's get back to the real story that you were talking about, Harvey, with making sure that people are being taken care of, whether it's health, finance, whatever. Kevin, Jessica, myself, Harry, we say this all the time, that you got to set yourself up with a good team. And whether it's your financial advisor, your accountant, your realtor, your mortgage guy, you got to make sure you're with people that are going to take care of you. And that's what when we're doing a mortgage for somebody, they're there for life with me. I'm building a relationship right here. So I'm courting them. And what do I need to do to make it to the next step? And you know what? It's just one of those things that we just make sure that it's not just a transaction. It's not just a number. We're going to make sure that we take care of you and we get it done for you. And there needs to be more of that in every industry out there, where, you don't just get out there. The guy that blows your leaves, does a half-assed job, and then all of a sudden he's got to come back next Sunday and do it again and charge you double. It's just, you've got to make sure that you're doing the right thing for people. Treat people how you would want to be treated. Oh yeah. It's a great time to be able to get something done, whether it's get rid of mortgage insurance, drop the term down. Let's look, let's run an amortization schedule on where you are with your current loan. You may be paying, if you're 17 years into a 30-year fixed, odds are you're paying more principal and less interest than you might on a new 15 years. So you got to look at those things, because at that point, when you get that far along in the loan, the interest rate doesn't matter anymore, because you're really not paying that much interest. So you really got to look to see. But a lot of people can save by dropping the mortgage insurance off, decreasing the term of their loan, and even keeping their payment the same. So, that's, it all depends on what your goal is, and, talking to your team about what is going to be the best thing for you. A lot of financial advisors are out there saying, mortgage as much as you can so that you have the biggest write-off. Well, with new tax laws coming out based upon who the president may be, that may not be the best advice. So we got to take a look at it. And like Jessica, Kevin, and everyone said, is like, once we figure out who that president may be and what their new policies will be, there may be different theories out there, and we have to adapt and change and overcome.
Well, let me bring something up into that as well. So this is what this is what I like that the listeners out there need to understand. And this is why we refer so heavily towards John and the team over at Capital, is that they approach things from a numbers perspective. I say this to my company, my team, people around me all the time. Numbers don't lie, people do. They're getting tired of me saying that, but it's truth. Numbers don't lie. They never lie. People absolutely lie. And we're unfortunately in an industry where you get a lot of people out there that are just pure-blooded salespeople. They're going to tell you whatever you want to hear in order to get your business, and then never talk to you again so that they can earn some money. That is a big chunk of our industry. The realization is at Capital, they don't do that. We don't do that on our team either. We're going to sit down with you and we're going to go through the numbers. Does it make sense? Is there a reason? Why would you do this? Right? And if the numbers don't make sense, because the numbers don't lie, we're not going to tell you to do it, because numbers don't lie, people do. So make sure that you're calling the right people. And if they're not focusing on the numbers, you need to ask yourself why.
Well, and just like John and Kevin are saying, just because the conversation right now is interest rates are really low, doesn't necessarily mean that that conversation is going to apply to you. So having the introductory conversations, getting in front of a good team like us at Stewart Team Real Estate Partners and like John and all of you at Capital to be prepared. Sometimes the conversation to be prepared takes a little longer, and patience is not my spiritual gift. I tell my clients that a lot. It just isn't. But to be prepared on the front end, have these conversations. And if that's what gets you in front of a good financial advisor, a good lender like John, a good team of realtors like us at Stewart Team, because the interest rates are so low, then that's the introductory conversation. It may take a week or two for us to have those conversations, but at least then you are prepared and you know what you're working with financially, timeline, process. Morning, Kevin.
Yeah.
Good question.
Yep. Well, it's not even a debt to income ratio question. He's got title interest in a home. So yes, he is now a homeowner. So he's disqualified for the first time home buyer programs. And any good estate planner, Kevin, Kevin's got the same, Kevin's going to tell you the same thing, but I'm going to let him tell you in a second. Any good estate planner will tell you, don't do something like that. Have your dad put the house into a trust and make you the beneficiary of the trust. And Kevin, go, you got this too.
Yeah, that's exactly what I was going to say. Get yourself in touch with a great estate planner. I have a couple that are fantastic. I've got one that I use myself, and they are going to have you put the home in a trust. You can do the whole thing differently without putting yourself on a quitclaim deed. We've had some people that will do quitclaim deeds and actually not file them. They'll keep them in a safe, but that's not necessarily a great way to do. The better way to do this is go through an attorney, go through a trust. That's the cleaner way to do it. I couldn't agree with John more. I was going to go down the same track, but he beat me to it. So. Yeah, in the trust, you can create the whole conversation and actually put one big tidy bow on the entire financial conversation of a parent. Yeah, Kevin, what we're going to do is, Kevin, we'll call you after the show. Myself and or Jessica are going to call you after the show. What we'd like to do is actually set a consultation with you, because again, we want to take a look at the numbers. We want to look at your current home, what the value of that home is, what you may want to move into, where you may want to go, what that's going to get you. We'll put you in touch with Capital, and we'll make sure that that goes through cleanly if you decide to make that move. But we first want to look at the numbers, and we want to kind of talk through with you what that would look like, and does it make sense for you to do right now. We'd be more than happy to just come out and do a simple consultation with you.
Hi, Harry Glanson Danberg from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Well, Harvey, you probably should have done that for last show because it's November 7th. And if you didn't do it by November 1st, you missed the deadline. But hey, that's okay. Just make sure that you get them filed regardless, because come around July of 2021, they'll need to be homesteaded as well. So it's very, very important. That's funny. I got a call. I have a client and she's amazing. No names. She's amazing, but she's a hothead. She called me up because I did a loan for her child and their taxes went up more than they've ever seen their taxes gone up. And she said that we set up the escrow account wrong and this and that, and it's all your fault, John, blah, blah, blah. While she's giving me her speech, I'm online pulling up the tax reports. And I said, I'm just going to use the name Jessica because Jessica's on our show. I said, hey, Jessica, guess what? You never filed the homestead forms for your son. What are you talking about? I saw him walk him into the thing. I said, well, I'm just telling you what I can see online at the city is that it said it is non-homestead. And yes, your taxes now have jumped $4,000 for the year instead of the $1,500 that they should have because the form was not filled out. Now, if he really did file it, just go back in there with the stamped receipt, prove to them that they made the mistake, and they'll go retroactive on you. But if he did miss them, he's got to wait those waiting periods. So very, very, very important that you get your homestead forms filed right away. Kevin and Jessica can tell you that even if you're in the process of selling your other home, you can file homestead on 2 different homes as long as you can prove the other home is for sale for a short period of time. So there's no excuses. Do it right after the closing. Get out there and get it done.
Right.
It's actually a long period of time. You have 2 years. You're allowed to be on the market for 2 years and they'll allow you to do that. And so we tell people if you've sold your home or let's say you bought and you're selling later, go ahead and file it immediately, because the tax implications, if you don't file it quickly, it's not just the fine that you have to worry about for the property transfer affidavit. It's the tax changeover that John just mentioned. We make a very, very big point of this. We send a reminder email. We put it in all caps. We put it on top of their closing package. We have a conversation. We give them the address of where they need to go. We call them 2 weeks after and make sure that they did it.
After.
Because it really can cause a huge problem if that's not done properly. It's really, really important.
Mhm.
I absolutely agree. We have quite a bit of new construction going on in the Rochester Hills area, both in downtown, not as much in downtown. The stuff that's in downtown is very high priced in relation to average price points. I mean, the average new construction property in the city of Rochester is going to probably start at $800,000. That's kind of the walk in the door price, and it goes well up from there. In Rochester Hills, a lot of our new construction is $500 to $600, right, Jess? I mean, would you agree with that number? I think that's a fairly average price point, but there's still not a lot of it. We have some great communities that are being built, some options that are going in there. But new construction, yeah, you're going to run thin in the next 5 years. I think John's got something to add on that.
Yeah, I've had some conversations over the last 2 weeks with some clients asking about the difference between purchasing an existing home and new construction. So Kevin and Jessica, can you elaborate on, is there, with everything going on with the pandemic, is there a increased price to build now because of the cost of materials?
Oh, extremely. I can answer that spot on.
Absolutely.
I've spoken with we work with 3 different builders. I've spoken to all 3 of them. Lumber alone is 25% high right now. They have a 25% premium. The builder has a 25% premium on their lumber costs. Their average cost for construction is between 13 and 15% across the board up. between labor and materials, and most of that is materials. So the builder has an increased cost of 13 to 15%. Who do you think they're going to charge that to? That is being charged to the buyer. They have to charge to the buyer because they're still in business to make money. They're not going to put that much effort out there into making a development to then give the homes away for free. That's not why they do it, and that's not why they sacrifice all their funds to do so. So that is directly going to be put into the buyer. That's what people have to realize. It's a great way to create your own inventory. It's a great way to design and build your own house. Building your own house is fun, but you have to understand that it comes at a cost, and it does come at a premium. There's not necessarily something wrong with that. If you have the ability, have the money, and want what you want, it's a great thing to do. But you have to understand the finances of it. It's not cheap to build a house right now.
If you're writing checks to people up front for a service they haven't performed, you're making the wrong move. You don't need to give hostage deposit money. We never take money for a pre-approval or for any type of hostage deposit money. I just don't see any reason to do it. That's number one, never have. Number two, you got to be careful of all the email, all the mass mail, and the phone calls you're getting. Clients are getting, in the middle of a refinance transaction, they're getting solicited to go ahead and run another credit report, pay fees, check certain things out. It's just not the way it's done. Be careful of those crazy email and those spam calls you're getting. Yes, when we pull your credit report, sometimes the credit report agencies sell their list to other lenders. We don't buy those lists, but other lenders do, and they're going to be on top of it. Don't give your credit card information or write checks to people that you don't know. Just don't do it.
Just like that, we got caught off.
Yeah.